bit of information about the FTSE, the DAX, the bunds and the gilts in terms of the spread tradable opportunities, so you guys start to understand a little bit more about the index arbing that goes on in London specifically, and about the relative value that develops from the likes of the bunds and the US yields and the American-German yield relationships, so that we can understand sterling trading that little bit better in London. Because it is very visible, guys. It is something that, you know, when you do understand it better, suddenly trading situations become very obvious. If I was to show you, for example, a situation, you know, it doesn't matter what we're dealing with here, but if I showed you a relationship here, if I said to you very, very quickly in terms of a chart, what does this mean? Well, this is gilts against the rest of the planet, basically. This is gilts against the spread here. So if I showed you what this is, and you looked at the relative value in this, it should automatically become very, very obvious what the trade is. You might say, well, the trade must be to buy gilts. Yeah, well, that could be the trade. Absolutely could be the trade. But it might also be another trade, mightn't it? It might also be a massive other trade. What else would that trade be? Well, this is the carry trade. This is the carry trade. If this is the carry trade, what is it? What actually is it? Well, it's a sell on pounds. It's a sell on cable. It's basically what we did on the cable when we did the Forex markets in week 1. So when I look at the candles below the black line, I can then look at the poundings and say I could sell pounds up here, and look at the pound at the top edge, look. I know that that is a sell on cable because I know it's a carry trade buy. So when I can see that trade there, I can short sterling and make a fortune on the road out of that, move. But obviously sometimes the cable market's already moving, which means it's an absolute shoe-in for a gilt trade at the bottom edge. It's a shoe-in for a gilt buy trade, this second arrow here. So I can take advantage of the gilt buy here, which might not show up on any other treasury market. Probably won't show up on any other treasury market. Why? Well, because the trade has already been done. That's why the gilt trade's moving. That's why it shows up in this market, because somebody's already done it on treasuries, USTs. So therefore the trade becomes a gilt buy trade. So it's really only, the reason why I'm saying London, of course, is because you've got to have the ability to trade gilts and bunds. Otherwise, it's a kind of waste of your time understanding this. If you're not going to trade gilts and bunds and DAX and FTSE, it doesn't honestly make an awful lot of difference. It's just relative value analysis, okay? But if you've got an intention to start trading things like gilts and bunds and bonds and DAX with the FTSE, for example, then it makes a lot of sense to be able to recognize some of these trades. So you can see that I can recognize instantly from this chart, when I'm going to sell the pound dollar. So when I zoom back out, and you can start seeing some relationships here. Look at some of these relationships here. If I was going to sell pounds during this period here, what do you think I'm going to be doing in this relationship here, for example? What do you think I'm going to be doing in that relationship there? I'm going to be selling pounds, correct? I'm going to be selling lots of sterling shorts. So when we look at sterling again, if we put sterling on the charts, look at sterling. Top edge, gaps open, down the next day. Selling sterling into that relationship becomes a no-brainer trade. And that short sterling collapses down. In this area here, selling sterling, surprisingly enough. Down goes sterling. In this area here, well, it's harder to read this one because the black line's now moving down in line, but you can start to recognize the value starting to diverge. It's got to diverge, guys. It's got to be crystal clear. It's got to bucket in the opposite direction. It's got to bucket in the opposite direction, like this is bucketing into the opposite direction. So when I see this coming into the opposite direction, I know selling sterling is the best trade on the planet, and the short sterling trade makes a killing. Into the bottom edge, I can see this starts to become very obvious into that top edge, but sterling's already rising. But as a bond trader, this is a brilliant opportunity for me to sell gilts So we can go into the sterling bond market and sell gilts at that point. And obviously the short gilt trade absolutely annihilated the downside during that period. And it was so crystal clear. The reason why it was crystal clear was because this is high and this is low, the trade would be what? Well, if I'm selling gilts, I'm buying the carry trade, so sterling should be going up. Well, sterling was already going up. Well, if sterling's already going up and this trade is in existence, this is a no-brainer gilt trade to sell gilts into that narrative. Now, this isn't just about the gilts, and it's not just about the FTSE. It's identical to what we do on the DAX and the bunds as well. So if there's an interest in the DAX markets and the bunds markets, it's the same trade. But as I said, if you've no intention of trading the DAX or the bunds, it's not going to add anything to your trading. It's just going to be kind of useless information if you've got no intention of trading DAX and FTSE and gilts and bunds. But if you've got an interest in those markets, which are obviously predominantly going to be based around the London session, then obviously we'll make sure we cover these in the London session so that everybody kind of gets a grasp of what it is we're doing in London during the morning sessions. Makes a bit of sense, didn't it? Aye, it does. Top edge bonds, looks as if we're going to go into offer watch, guys, going into the classroom. Offer watch, top edge bonds for the time being. Little bit of value developing. Short term, we've lost the value, but we're not selling it just now because with short term, we've lost the value. But macro-wise, if you draw a line across this chart here, you'll start to recognize that macro-wise, we're starting to see just a little touch of value coming into this bond price at these higher prints. You'll see that and recognize the value coming into that chart is pretty groovy. There are an awful lot of offers on the offer book all the same, is there? It's a little bit empty. A little bit empty of offers up here at the moment. So just a little bit of pause. Big liquidity showing up, flashing up at 10s, guys. Big liquidity at 10s. I lent against that liquidity at 10s and I got a quick trade off 9s. It's dropped down to 8s. I'm taking some profits at 7s. Taking some profits at 7s here now, guys. 2 ticks profit. Boom, boom. 2 ticks, guys. That was easy, wasn't it? We saw big offers coming in at 10s. Sold at 9s. Profit at 7s. 2 ticks. Stops at break even. Stops at break even instantly, guys. Literally instantly. That was brilliant. That was a beautiful little 2-tick trade. You may be laughing, 2 ticks. 2 ticks, come on. Getting excited about 2 ticks these days. What the hell's wrong with you? Well, how much did you make in the last 30 seconds? I just made several $1,000s. Thank you very much. Bunch of bloody miseries.